When we're looking for mega trades, these are trades that are significant in magnitude. They're not little day trades, not short-term trades. They're much more prolonged in their duration, and usually they can go about 6 to 9 months or more in the stock market. But as it relates to stocks, we're going to make a small segue from, as I define quarterly shifts in the Forex market and currencies, the quarterly shifts that occur in stocks are closely correlated to earnings. So the impact of quarterly cycles and earnings in the markets, we can't ever overstate them as it relates to the stock market, because obviously every company out there that trades publicly, their business is obviously intended, aiming at being profitable. No one starts a business with the intent of losing money. So all of the stocks that are publicly traded that we can invest in, other traders around the world can invest in, their goal is to make money. Not so much for their investors, but for themselves. So greed is the number one driver for these companies' existence, making money. So their earnings that is reported on a quarterly basis will have a great impact. So every 3 months, we can be on earnings watch and anticipate the next big movers based on their respective earnings. Now, overlapping of Megatrade conditions and coupling this with the effect of quarterly earnings is crucial to finding the next explosive market moves. Seasonal tendencies. Obviously, I've mentioned this throughout this mentorship, but when we're focusing on stocks, as you can see here, this is a generalized seasonal tendency for the stock market. It generally makes a low at the beginning of the year, trades up into spring, goes into a consolidation time period, usually all the way into the fall, and then creates the best buying opportunity, in my opinion, for stock investing around September, October time period. It can be as late as November sometimes, but the fall months, September, October, November, in that 3-month quarterly shift or earnings season, there could be an enormous rally that takes place for buying stocks. There are times in the year when throughout the spring and fall months, the market will go higher. They're not always going to lockstep to what the seasonal tendencies are showing here in this graph, but as I mentioned earlier in this mentorship, when we're looking at stocks, the best times are the first half of the year, and then the best overall for the entire year is the latter portion of the year, the fall months going into the end of the year. By coupling the quarterly earnings and the seasonal tendency, as I mentioned here, if we look for March time period, the first quarter's expectation, earnings expectation, those releases of earnings in the companies, when they make those public, will generate a lot of movement in the price. Much in the same way, the third quarter earnings for stocks, which are reported in around the fall time period as well, they will be a huge generator of that big end of the year rally. Now, by blending these 2 times of the year with earnings, seasonal tendency, and other facets we'll cover in this teaching that make up a mega trade, you have a greater degree of odds stacked in your favor whether you're going to be successful in selecting high-flying stocks. The major market direction. Now, every significant mover in the stock market is going to have its momentum increased by the general market direction. In other words, are the 3 general averages, the NASDAQ, the S&P, and the Dow Industrials, are they moving up collectively, or are they moving lower collectively? Obviously, strong stocks can rally higher without the assistance of major market direction, but typically they accelerate when the broad markets move higher. Obviously, it's been stated numerous times, even when I was teaching on baby pips. One of the easiest analogies is, if you're a fish in the stream, it's easier to swim with the current. You don't want to be a salmon. Okay, salmon swim against the stream, and once they get to the top, they're dead. Okay, they don't have any existence beyond that. They do their job, and that's it. Well, as traders, we want to swim with the stream. Okay, we want to go with the current, and it's easier to find high flyers in the marketplace when we understand the direction of the marketplace. Now, the mega trades are really specifically aimed at looking for buys because the market is predisposed to go up. The stock market is a Ponzi scheme. It's meant to get people to buy into it. So therefore, they always have to continuously create these high-flying opportunities. The wonderful thing is the institutions walk around barefooted, and we can see them and see their footprints. Wherever they've gone, they're easy to see it. But the problem is most traders are not disciplined enough to wait for those conditions or know what to look for. We're going to teach that in this teaching and in the August templates. But when we're looking for mega trades in stocks, it's going to depend on the support of your trade idea, seeing major market direction, whether it's a qualified mega trade candidate or not. Generally, the stock market moving up as a whole, all three general averages moving up as a whole, that will support a strong buying opportunity for stocks. So while we understand that the strong stocks that exist out there will move sometimes ahead of the general market, we want to be looking for conditions when the general market is poised to trade higher. And if it's poised to trade higher and it's a seasonal tendency or quarterly earnings overlap, it is like one of those perfect storms where everything comes together and then you have a really good chance. It's not a be-all end-all panacea, but you have a really good chance of seeing that stock appreciate in value. The fundamental screen. Now, to some degree, there is a fundamental impact to stock prices and their respective movements. I beat on this topic a lot because admittedly, I'm not smart enough to go through all of the fundamentals and digest that stuff. And I believe that there are folks out there that can spend a great deal of time doing it. And for whatever reason, if they look at certain things on a fundamental scale and come away with some analysis and it makes them money, who am I to say that that's not valuable? I just say, from my personal standpoint, over the last almost 24 years now, I've very rarely looked at fundamentals because of my limited capability as a person. I don't have the aptitude personally to go through all that stuff. So I've always looked for shortcuts to give me the directional bias based on the fundamentals by smarter folks than me. Okay, and the wonderful resource that's available today is technology. We have in our smartphone more information and insights available at our fingertips than the president of the United States had just 20 years ago. It's phenomenal to know how much resources that we have. We have a library of limitless capabilities in terms of understanding where the information is right now, and we can get it instantaneously. So by having a systematic approach to screening stocks fundamentally, okay, it's going to be advantageous to your bottom line. The problem is where do you go for these fundamental informations and insights? There's a lot of different books I've read over the years, and while most of them I don't agree with them, or I felt that they were overcomplicating the process, it's really important that we keep it, doable. Okay, don't inundate ourselves with so many tasks that we really won't come to the conclusion of having a selection made, because there's a lot of different ways of doing fundamental scans. Looking at earnings per share, looking at quarterly numbers, annual numbers, which I do think those last two are important because it's part of the CanSlim approach that William J. O'Neill uses and used to run his company, Investors Business Daily, which I wholeheartedly stand behind. Not because I get anything for it, but I am a customer. So I've used it for years. I've always referred to it whenever I talk about stocks. I think it's one of the best front-running instruments out there, and it does have merit to follow their breakdown over the sector and industry groups because they do all that number crunching for you. Now, there are folks out there that you can go on YouTube and find various ways where they go through individual sectors and they go through individual industry groups. And yes, you can do all that work, okay, and make you feel like you're a scientist or a PhD level analyst. To me, I tried to do all that stuff in the beginning, and it just frustrated me. So I've always looked for some way to make it easier, okay, for me to come to a decision. Because if I have no problem or barrier to coming to a conclusion about whether I want to be a buyer or seller. Once I know what I want to do, okay, I want to be a buyer, okay, then what do I want to be buying? I have to have a very simple approach to determining what it is that I want to buy. Because once I know what that is, I'll have no problem or fear going in and buying it. Now, I may not know exactly when to get out. It may go way farther than I want to, hold on to it for, but I don't care about that. As long as I'm consistently doing the right thing, the numbers will take care of themselves. The screening process, though, it's best if you keep it short and simple to avoid wasted time and energy, and use today's institutional tools, because there are tools out there that are relatively inexpensive. And yes, you're going to have to spend some money sometimes, but if you're going to be an investor, you're going to be a trader, and you're going to be doing it on your own, what's better? You spending a little bit of money once a year or a couple times throughout the year or quarterly, or if you do it a monthly subscription, it's not a lot of money. If you turn all of your money over to someone else to manage it, believe me, they're not watching it like you would be watching it. They're not going to nurture it. They're not going to cultivate it, okay, and try to increase its earnings potential. Funds, by far and large, are just churning everyone else's money. They get fees and such. If it happens to make money, then great. Then you're going to talk about how great they are, and you'll bring other people in. But really, they're not in a position to guarantee your positive outcome. The industry is sold that way, but we're not owed anything by these investors or these funds. So it's better for you to spend a little bit of money, invest in your insights, and trust your own decisions, because that way you're minding the store. No one's going to mind the store or mind your own business, okay, better than you. As an investor, as a trader, that's the best advice you can give yourself and your children, is you have to mind your own business. You have to do the things yourself. Someone else managing your money isn't going to appreciate the things that are coming up. Children are getting ready to graduate and go into college. Do you have money for that? Okay, the guys that run these funds and gals that run these funds, they don't know what your family needs are. They don't know what your time horizons are. They may ask you in a generalized survey at the beginning when you open up the account, or maybe in passing and talking, if you even get to talk to anybody at all. But generally, they don't care. So you want to be doing this informational scan fundamentally all on your own. And you want to keep it simple, short, and don't overcomplicate it. And obviously, relative strength analysis is important. So when we're looking at the stock market sectors, okay, which are just broad areas of the stock market, inside those sectors, there are industry groups that are more specific about what type of companies are in those larger group of sectors, market sectors. So you have these big lists which make up a sector. Then you have subcategories, okay, or industry groups that make up those respective sectors. It's an enormous amount of work to literally go through all that stuff, okay, and number crunch and look for leadership and all that stuff. And over the last decade or so, there's been advancements in technology and trading tools. Some of them have been in the form of like heat maps. I played around with them earlier on when they first came up, but I just found that it's much better just to trust the resource tool like Investors Business Daily. They do a wonderful job, in my opinion, of sorting through sectors and filtering out leadership industry groups. That way you can really focus in on the stocks that make up the leadership in those respective industry groups. Because for relative strength analysis, really what you're doing is in a bullish market, you're looking for bullish sectors in the marketplace. And inside those sectors, you want to find the strongest industry groups that are going up. And inside those respective industry groups that are going up, you want to find the strongest outperforming stocks in those industry groups. So what you're having is a bullish market. You're timing it. You're looking at the market that's predisposed to go higher. Then you're looking at a sector that already has evidence that it's going higher because it's moving up already. Okay, so it's outperforming all the other sectors in the stock market. And then inside those respective sectors, you're focusing on the industry groups that make up the leadership, industry groups that make that sector go up. So you're focusing on the strongest of the strongest of the strongest during a bullish market. You cannot get better than that. That's what everybody wants to do, but no one understands how to do it. We all want to invest, we're told to invest for the future, but we don't know what it is that we're supposed to do. And they should teach these things in grade school, but they don't, because they want everybody to be slaves. They want to be, borrow, go into debt. Okay, no, you be the bank, you be the loan officer, you help other people by giving your money out. If you have the mindset that you're going to increase your net worth by investing, do you bet on a horse race where the horse has got previous injuries and it just made its way into the contest, and who knows how it's going to perform? Or are you going to back the one that has proven itself in previous races? Okay, and for instance, a Triple Crown, those types of horses, they are proven horses. They've proven themselves in other races. So if we're looking at stocks, it's better to have our focus on areas that already have predisposed movement to go higher. They're already showing relative strength across the sectors. It's showing relative strength across the industry groups. And inside those respective industry groups, you're looking for the stocks that outperform or going up stronger than all the other ones in that industry group. So whether you're searching for index stocks, as I've already taught before in the stock selection templates and modules that I've done on free and in the mentorship here, or growth stocks, which is what really the Megatrade candidates are really all about, it's crucial for your stocks to be leaders of their respective industry groups. Now, if you couple this with the SMT divergence that's seen in the indices, okay, between the NASDAQ, the S&P, and the Dow, you got gold. It's amazing the responsiveness you see in the marketplace, because really what you're doing is you're fine-tuning your attention to what all the institutions are doing. Now, I have not been formally trained for stocks. Okay, I've not had anybody as a market maker or a big firm, anybody sit down and tell me this is what the big boys do. I had just fully convinced myself of it because I've seen enough of it over the 20 plus years that it's pretty easy to find these things each year. The problem is I want to be in one asset class because my attention is limited. So I'm comfortable with Forex. For some of you, again, Forex brought you to me, but it may not be your asset class of choice. 5 years from now, you may not ever trade Forex. You may never trade currencies, never trade even commodities or bonds. But you may end up saying, you know what, I like stocks. I'm not trying to convince you of it. I'm just saying it could happen. So if you feel that tug of war inside internally, don't resist it. Go along with it and see where it takes you. But here we have an example of Facebook. And Facebook is plotted here as a bar chart. And then I have the Dow plotted as an overlay. Okay, so this is seen on barchart.com. You can do a simple comparison chart and put in $DOWI. Again, it's $DOWI. That's your comparison. And when you do Facebook, which is symbol FB, you end up with this chart here. And all I did was highlight the April time period where Facebook had a higher low while the Dow made a lower low. Now here it's just showing relative strength, but at the same time in April we saw the Dow make a lower low, the S&P make a lower low, but the NASDAQ failed to make a lower low. It had a higher low, and that's an index SMT. During that time, we would expect higher prices in stocks. If you go back in the mentorship, you'll actually hear me talk about how I felt that we were going to see stocks go higher, and we've seen that happen. Right now, we're seasonally going into a time period where it should correct and go lower. We'll see if it happens, but nonetheless, relatively speaking, Facebook was stronger than the general market. It was unwilling to make a lower low at the same time, and as a result, Facebook had a nice run up from 140 to 165. So about $24, $25 a share in terms of movement. That is nice, folks. That's a big, big move for stocks. And to find those types of moves, okay, in such a short span of time, that's what a mega trade is. You want to find something like that that really puts out a lot of energy, covers a lot of ground, and it moves. Now, this isn't the best. Okay, I just give you as an example here for relative strength analysis and the effects of a quarterly earnings overlap, quarterly shift, a bull market already in the stock market, and then applying the index SMT, and then finding a stock that has a fundamental strong basis. Fundamentally, Facebook has been proven to be fundamentally strong, and institutions are pouring money into it, and therefore we see this extrapolation on the upside for its share price. Okay, so let's simplify it a little bit more. Okay, so if we're seeking mega trades in stocks, the process in simple terms begins with we anticipate new earnings leaders. Next, we plan seasonal tendency overlaps for annual movements. So every year, we anticipate when the bullishness comes in, beginning of the year, and towards the fall months where it makes a seasonal low and rallies towards the end of the year. So we're looking for those two times of the year to have a seasonal tendency and to overlap with those respective quarterly earnings. And then we're going to refer to the direction of the major stock in the season. In other words, what's the market direction? Is the market trading higher, or is it poised to trade higher at the beginning of the year or during the fall months? Because that's paramount, because you need that for the mega trade to unfold. And then you perform fundamental screening. Now again, I'm relying on Investors Business Daily, as I'll show you after this slide, but you have to do some measure of fundamental screening to pick out stocks that are poised fundamentally to go higher. If they're not making money, chances are they're not going to go higher, right? So the high-flying stocks that go up are the ones that make tons and tons of money. Okay, highly profitable stocks, not just that surprised and made money for the first time. They want to see an increase of sales over each quarter. Previous years, quarter-to-quarter relationships, are they increasing? Annually, annual sales increasing? Is there new products coming out? All those ideas that we mentioned in CanSlim, those things that lead well to overall profitability for the company. Then you're going to perform a relative strength analysis to filter out leadership stocks based on sector and industry groups. And again, I rely on Investors Business Daily to do that for me. It literally takes minutes, as I'll show you. And then obviously, once you have identified the stocks that you like, you would go into the options chain and look at the Greeks to determine which option and what strike price you would look to trade for an opportunity. And yes, during the month of August, I will talk about the options and the Greeks, teaching you the gamma, theta, delta, and all that business, so we know what we're doing in terms of stock trading with options. Now, obviously, this is an overview, and it's going to be fully refined and defined in the PDFs that you get for stock top-down analysis in August. But I want you to think about the process of how we would go into it every year the same way, every quarter the same way, looking for these influences. Now, between the spring and fall months, again, that's usually a consolidation time, generally. But there are times when we can use the SMT divergence in the major averages to time buying opportunities. If there's a higher low in one of the averages when the other two make a lower low, that's implying that there is a small short-term bullishness in the marketplace. You can short-term trade these types of stocks using Investors Business Daily, fundamental sort and scan, and time it with relative strength analysis, and when the general market's poised to go higher. So by having those ingredients, if you will, you end up getting really amazing big pops in the stock market in these respective stocks. So let me take you over to Investors Business Daily and show you how easy it is as a customer of using that resource. I think it's one of the best things out there if you're going to be investing in stocks. If you're not going to be investing in stocks, then obviously you can just watch this for entertainment purposes and, I guess, be bored by it. But the long and short is, this is one way you can find amazing stock movers each year. Okay, folks, we're on the Investors Business Daily website, and we're going to assume that we've arrived at a time when the stock market is poised to go higher. We're at a quarterly impasse where we expect some shakeup in earnings. We expect the new leadership to step in for this quarter, and we're looking for fundamental basis to determine what stocks we want to be looking through and finding that technical relative strength divergence, which in my opinion, is like the magic signal. Okay, that's the silver bullets pattern for trading stocks. It's, to me, it's the absolute best thing out there. Everything else pales in comparison because it just shows real institutional sponsorship. You can see it in price when a stock fails to make a lower low. And it's in an industry group that's already stronger, and it's in a leading sector in the stock market. When the stock market's poised to go higher, wow, you just can't get any better than that. The only thing that's next is find an undervalued call option and just get in there and take it out. But we're going to go to the area called leaderboard. Okay, and you click on that, and this is all it takes to do a fundamental sort with Investors Business Daily. It used to be I would go through all of the tables and find all the relative strength ranks of 90 or better, the all the bells and whistles that would be offered by the Investors Business Daily concept. RS, relative strength, and earnings per share. Their institutional sponsorship, rating, all those little tabs, which I'll show you in a second here. But they've really streamlined it. Now today, it's a lot easier. So when you go to the leaderboard, you can go to IBD Top 50. And when you click on that, it gives you a complete list of the top 50 sorted by way of their fundamental ranking system, CanSlim. Okay, and you can look at all of the research tools over here. And I'll just take a look at TAL. Okay, TAL. We'll go over to barchart.com and we'll put that in TAL and leave it sorted against the Dow. Okay, and right away at that same time when we can see the Dow making that lower low right here, what was happening in this stock? It was not making a lower low. Okay, it was during a consolidation when smart money steps in and buys, and from about $100 a share all the way up to $150 a share. Folks, listen, that is a phenomenal price move. That's huge. That's enormous in terms of how much potential there is in these types of movements. And most stock traders dream of seeing these types of moves. Now, granted, we are in a kind of a fast market. The market just keeps going higher and higher and higher. But every single year, this method works. Now, you can do it the hard way and go through all the sorting of looking for the IBD ranking systems and do each individual thing. And why you would do that now would be silly. But that's how I used to do it. And it would literally take me a couple hours on a weekend when I was getting close to these times of the year, especially fall. And once I had my sort list, my watch list, if you will, okay, I would just go through every day and I would look for these divergences, okay, to occur at the time of the year when it should occur. And if I have the industry group leader, I have the sectors that are on fire right now that's going up, and I can filter out the ones that are strongest in their respective industry group. Oh man, I got it licked. But let's take a closer look at this right here. This is the Dow right in here. And let's take it that same time period. Again, it's this low here is essentially March 27th, 2017. And the low here is April 19th, 2017. We're going to go over to the NASDAQ. You can see the higher low. The NASDAQ was unwilling to go lower. Now, NASDAQ is highly slanted for technology. Okay, so tech stocks are going to be really outperforming on the upside. But we can see the divergence here with NASDAQ failing to go lower. S&P cash, you can see at the same time period, failed to make a lower low. And then at the Dow, clearly making that lower low. So we have the index SMT divergence at a quarterly shift, Higher prices were called earlier in the year. Go back and watch all the videos. There's only a few times I talked about the stock market, but I said we would make a higher high, and we've been trading rather aggressive on leadership stocks. Now let's go over here and go and look at a company. Let's go to LITE. LITE. Now you can see this stock has made a lower low in here. While it still had a pretty good run in price, higher, with the timing of that lower low in the Dow but failure swing on the NASDAQ, that's our index SMT divergence, we did not see a higher low form in this LITE stock. So while it was still on the fundamental sort or screening by IBD, it would not have been an ICT buy for a Megatrade because it made a lower low. We want to find stocks that make that higher low right there because the institutions will step in. They're going to be buying a lot of it. So we'll go back over to the Investors Business Daily. Okay, and we'll look at the next one, NTRI. Okay, and we have a stock here that just recently gapped away from a consolidation. Okay, so we've already moved away. We gapped up. We have a big gap in here. So what do we think in terms of institutional order flow? Chances are that even though we have the S&T divergence rate in here and a higher low formed, price could come down here and close in that gap. Now, it's interesting that how price came all the way down into the top of the gap, found support, left the gap there, and rallied. It could have very easily just came down and closed in that gap. So we've already extended away too much and left a big old gap. This would not be a good candidate to be a buyer for stocks because that gap could close. And we don't want to be a buyer of a move that's gapped away like that. We want to wait for the market to be more in a consolidation and just recently leaving a consolidation. This is too much of a move away from the consolidation that previously existed. So we'll go back to IBD's 50 list. Okay, and we'll look at STMP. Okay, similar. We saw, even though they had a nice price rally in here, at the time of the S&T divergence with this lower low in the Dow, we were making lower lows in the stock price as well. So again, this would not be a mega trade, even though it did perform nicely. This is not one we would be trading. So we're going to go back to our list again. And I'm not going to do all 50 so you guys know. The next one is ANET. Okay, and we've had price in a recent consolidation here, and then it left the consolidation. We went into another consolidation here. See how it was much more of a base in here during the S&T divergence period, lower low in the Dow. This stock was already in a consolidation. So this is one that would have been a selection, in my opinion, to make a move up. Even though it had the gap here, we had consolidated sideways for a little while. At the same time, the S&T divergence was occurring in the indices. And then price moved up from about 130 up to 160, $162 a share. So not bad, about $32 a share. It's a nice big whole move, folks. Go back over to our IBD list again, and try to find one that I can clearly see have performed well. This in here had a really nice trend here. We'll see CTRL. CTRL. Okay, another price had gapped away, but we consolidated. S&T divergence on this swing here, higher low formed here. So we had, I really wouldn't like this one because it's below $20 a share. I like to see stocks above $20, preferably $25 a share. But you can see it had a nice little move in here, about $10, which isn't all that terribly exciting, but looked really nice technically. But it would have fit the criteria had it been above $20, $25 a share. Now we're going to go and look at the list in a full list version, and we can sort through and see all of the, I like this rating right here, the Smart Select Composite rating, okay? And I want 98 or higher, okay? Because what it's done is it's made a composite ranking of the earnings per share rating, the relative strength rating, industry group relative strength, accumulation distribution rating, and by blending all these key tools that IBD has basically patented for themselves, they can make a composite rating number over here, and they sort this IBD 50. It used to be IBD's top 100, and they've condensed it down to now 50. So to me, it's a much easier approach to go through 50 stocks, but you can go through all of them, okay? And what we're going to do is we're going to look at the share prices in here, and we'll find one between $25 and say $80 a share. Okay, Fox Factory Holdings, so it's FOXF, composite rating of 99. So we're going to look up FOXF. So FOXF. Okay, and we can see that during the time of the S&T divergence in here, lower low on the Dow, not in the NASDAQ, higher low formed, $27 a share, went up $10 a share. Okay, not a huge amount of movement, okay, but look at the performance, not bad. It's like a 50% return. Okay, we're going to look for another one. Right here, YY Incorporated ads. So we'll look at YY. Okay, and here we made a lower low. So that wouldn't have been one for us to pick. So that would have made the cut. The next one we'll use is Paycom Software, PayC. And it's really easy to do this when you're sitting down to do the analysis. You just want to go through and sort through the stocks, put some music on, get a pen and pad, and literally just go through, and the ones that meet your criteria, okay, that make the fundamental list, you have that stock on your list, and you go through and you keep watching until the indices create the S&T divergence, and then you go through and you find the stocks. Here we have the higher low formed. It's trading at around $58 a share. Price rallies up to $73 plus. So it's a nice little move there. About 40% or so increase. And that's the thing about that, folks. That's decent in less than a year. So can you imagine what the options were paying out? Okay. Now we're going to pull up our next on our list. Let's get something over $50. We'll do PayPal Holdings, PYPL. PYPL. Okay, really nice. Higher low formed during the S&T divergence, so we know institutional buyers are coming in. We're in a consolidation. We're about ready to break out to a new high, and boom, gap up here later on after the divergence. Okay, so trading around $42 a share up to $59 a share. Nice move there, really nice move. Go back to our list. And here's one here, trading at $84 a share. CNC. We'll go to that one. CNC. Okay, we have a higher low here at $70 a share. Trades up to $86, so $16 a share appreciation. Nice movement during consolidation, ready to break out to higher highs. So that's a nice move there. And we'll scroll down. Dave and Buster's. Just took my family out to that. Matter of fact, it's kind of cool. Their symbol is play. P-L-A-Y. Okay, really nice signal here. Higher low, lower low, S&T diversions. Buy around $60 a share, goes up to $73 a share. Nice movement there, about $13 a share appreciation. And here's PRA Health Sciences, PRAH. Okay, higher low formed here, and price moves up about $15 a share. Make sure I got that right. 2, 4, 6, 8, 10, 12, 14, 16, about $16, $17 a share. Not bad. And we'll go back over here and we'll go through and look at Activision Blizzard Incorporated. So ATVI. ATVI is a symbol. ATVI. Okay, and we have a higher low here formed as well. So we can see the institutions are stepping in. We're close to this old high. So we broke out with a gap here, went sideways, came up and consolidated again during the S&T diversions. That's a buy at $49 a share. Trades up to $62 a share. Not bad. Very nice movement there. Now this is just the IBD 50. Okay, there's another sort that they do. Just want to find one more mover in here. We'll look at Massimo Corp. MASI. MASI. And this one here already really extended up. Small little consolidation in here. Didn't go lower, rallied a little bit, but then gave up the ghost aggressively and traded softer. The fact that we had all this extension, no real consolidations in here, that makes it suspect to me. You can see it's a turtle soup. It rallies a little bit and plummets. So while it still was fundamentally there, we'll say that we actually took that one. That could have been a loser. Not bad for the trades that we sorted through real quick as a paper trading idea from hindsight. These stocks were fundamentally strong. And another thing they do is an IBD sector leader. And you can go through these and they'll be similar. You just got to go through the whole process of going through the entire list. But by clicking on this tab in this area here, it gives you a group of stocks that are leadership for their respective sectors. And here's one for Facebook. Okay, we used it in the slides. So here, Facebook, FB is the symbol, naturally. So we'll go over here to FB. FB. And again, looks like the slide showed real clear, obvious divergence. Okay, just above the old highs in here during this consolidation. So we didn't really extend too much. We were in consolidation again. S&T diversions, higher low formed, big, huge institutional stepping in. 140 trades up to 164, so $24 a share. Price move, really nice. Going back to the sector leaders, we'll go down to we already looked at YY. We'll look at looking for one from like $60 to $80. Here's one here. Okay, we'll look at this one here, AAOI, share price of $89 a share, basically 90 bucks a share. So AAOI. And this one here, while it did move nicely, we had a lower low form. So that would not have been a candidate. And we've also, we left this consolidation. We had a little bit of a gap in here, so that would have been a potential fill. Notice how it went down to the top of the gap, found support, and rallied away. So yes, this would have been a nice mover, but the criteria is it has to have a higher low, and it didn't form that. Alibaba, BABA, and don't be concerned about the share price being over 100 bucks, because we use the option, and the option will give us a lot of leverage. So we have the old high here, consolidation, small little rally, and win a consolidation again. S&T divergence, higher low, a buy around 112, went to 155. Huge move, folks. Big move. Nice big performer there. And that's a real quick example how you can use IBD as an investment tool to sort through fundamentally strong companies without going through earnings per share stuff, without going through all the stock tables and using all the resources that other folks would otherwise inundate themselves with. Let folks out there that number crunch better than you and faster than you do the work for you. And I think, in my personal opinion, Investors Business Daily, they ferret out really good, fundamentally strong companies, but by themselves, they can make the list all day long. And just because they're on the list, and you can see just by the little graphic picture they have here, like for instance, this MKS Instruments, okay, look at the performance of this thing. It went way down. Just because it's on the list doesn't mean it's going to perform. They don't teach you the S&T divergence in their studies, in their teaching stuff. Okay, that is something that I picked up from Larry Williams, then I applied it with William J. O'Neill's fundamental stuff. So I put the best, in my opinion, the best of the best. The best technical pattern I think exists in trading is the relative strength divergence that's seen in stocks against the major averages. And if you do that same thing with the strongest sectors and the strongest industry groups at a time when it's going to go higher, you got it licked. I'm going to say it, it's easy to find the high flyers. They're graphically, standing out in the charts. You can clearly see them diverging. And when they fail to make that lower low, when the indices are diverging across the three, when one fails to make a lower low, that means that there's big buying coming in. That's why that index is not making that lower low. So what are they buying? Well, NASDAQ is the one that was failing to make a lower low. So that means technology stocks are going to be outperforming clearly. And if you go through all of the sectors, like if you go to, there's a website here I'll give you. You go to investorguide.com. You can go through all of the major sectors. These are the major sectors here. We can go into technology, click on that, and what it'll do is it'll give you all the stocks in that individual sector. You can go into the industry group, click on that, and say you want to go to technical and system software. Okay, click on that. Okay, and it gives you all the stocks that make up this respective industry group, technical and system software. So you can see you can do it the hard way and go through sorting all this business yourself, okay, and try to find something, or you can just simply use IBD. There is a gentleman on YouTube that I watched a couple months ago. He did a breakdown on how to come up with a relative strength list or sort for stocks, and it uses telecharts, T-E-L-E charts. It's like a $9 or $20, it's either $30 or $10 a month package where you get in and you look at stock prices, and you can sort through their, I don't know, it's like a screener, and you can click on and do like different sorts and different formulas and stuff. He actually does a video, and I'll show it to you next time we do our live session. I'll pull it up and show you the link and all. I'm not going to include it here because this is part of my marketed stuff. So during a live session, I'll just pop up and share the link with y'all. I'm sure he won't mind that. But I think he did an interesting approach to scaling through and sorting the stocks that were, I guess, by his definition, fundamentally and technically, I guess, aligned, where you end up with a watch list. He doesn't teach what I just showed you in terms of the index SMT. That, to me, I think is the silver bullet. That's what everyone's looking for. And if they understood the conditions of the marketplace, which is obviously the stage, you have to know when the market's going to move, whether you're trading commodities, Forex, or whatever. But once you understand that the stage is set, that it's going to go higher, then if you start looking for that little crack in the averages between NASDAQ Composite Index, the S&P Cash, and the Dow Jones Industrials, by plotting them on a daily basis and looking for them to diverge at logical time periods every 3 months or so, 3 to 4 months, there's a time when it will diverge. And when it does, you go in and you do the same sorting procedure. And I'm telling you to only do it on the buy side. There's ways you can sell short, and I'll teach you that in August as a separate teaching. But predominantly, the market's more predisposed to go higher. And it's better to do a sort looking for stocks that are going to go up, because there's more likelihood to see funds, mutual funds, large firms pouring money into a company than they are leaving them. Okay, not to say that institutions don't leave a asset or a stock, but it's better for you to be focusing on stocks that they're pouring money into, because they're going to spend more money and pour money into it longer periods of time than they are just to get out of the stock. So the moves are much more longer in duration when there's a buying opportunity, and selling usually is really quick and short and they're abrupt, and you got to know what you're doing to sell short in stocks. So hopefully you found this teaching insightful, and I'll give you more insights obviously when we go into August. I'll give you the complete step-by-step approach in PDF file and in practice. You can see me do it, but this is to kind of like open your eyes up to using an Investor's Business Daily as a resource to do all your fundamental work for you, and then blending that with our technical approach to trading and viewing smart money's accumulation and distribution patterns. And until next time, I wish you good luck and good trading.